Hey, good morning, everybody, and good afternoon, wherever you are. Welcome to Power Hour, episode 3, every Monday and Friday, 10 a.m. Pacific, 1 p.m. Eastern. I see Paul, Jared, William are here. Can you guys give me a thumbs up if you guys can see me and hear me properly, please, in the chat? So I don't know where my sidekick is. I think he's working out. So I would really like one of you to put a thumbs up in the chat if you guys can see me. Okay, good, Jared. Thank you so much. All right, so how was everybody's weekend? Hope you guys did well. I did a lot of driving for my son for his soccer game, literally 300 miles this weekend. So I am his Uber driver. Unfortunately, he got hurt. I think he may have a torn ligament in his knee, part of the game. Hopefully, it's not, but he's hobbling around. But forget about that. Let's go. So, class is in session. We've been talking quite a bit about technical trading, and then we're going to expand on that a little bit. I put up a couple of books for you guys. Where to buy it, what to read about it, start educating yourselves. As I said, I'm a techno fundamentalist, so I do pay attention to fundamentals, a hybrid between technicals and fundamentals. Debbie, thank you. You're welcome. You're welcome to the chat. Now, I am going to talk to you guys a little bit about technical analysis today. What to watch for, what to the basics, right? I mean, there's many tools for technical analysis. That's why, look, what you put into this is what you're going to get out of it. I cannot teach you everything because I don't have the time to go lives and do more videos, but there's already like 12 or 13 videos on the channel. Thanks for the support, by the way. I appreciate it. I know there is some crossover from the other channel to this, but I would like actually to build a community of financial wizards here as opposed to anything else. But look, finances is part of our lives on a daily basis. It doesn't have to be trading. It could be credit cards. It could be mortgages. It could be anything, right? And look, money is the root of all evil, but I'd rather have it than not have it, okay? Because lack of it creates a lot of problems. Probably the top, a reason for couples to break up is finance. So, how was last week? Let's do a little quick recap. I put my little Robinhood account up. It was up about 20%. Hope you guys did better. I'll give you my opinion towards the end of the show in the Q&A part about what I'm expecting for this week. And we'll wrap up on another Power Hour Friday at 10 a.m. Pacific, 1 p.m. Eastern. So, with that said, let's get into it. I do pay attention to technicals about 70%, 65, 70%, and 30% fundamentals. Like I said before, a few times, picture is worth 1,000 words for me. The picture tells the story, and then you just go deeper into it. So let's. There are a few keywords that everybody must understand. You have to pay attention to something called support lines. You have to pay attention to something called resistance lines. You have to pay attention to another word called breakout or breakdown. There are nuances that goes into that, but to start with, let's pay attention to those four. The breakouts, breakdowns, what is real, what is not real, support lines, resistance lines. I'm going to put some screenshots up and try to explain this to you guys. The important thing is get the basics down. Once you get the basics down, then you just have to look at charts, as many charts as possible, and identify those spots for yourselves, right? Now, is it as easy as, okay, buy every breakout, sell every breakdown? No, it's not, because there's a lot of nuances that go into that. But the important thing is to understand trends. I talked about this a million times already, right? The trend is your friend. If you are buying and selling an equity or any asset class within a trend, then the likelihood of you making money is going to be a lot higher than going against the trend. Are there counter trend things that I do? Yeah, once in a while, but that's after 30 years of learning and getting smacked a few times. So I prefer to go with the trend. And here's, let's see, here's screenshot number 1. All right. So, what are support and resistance levels? Support levels are areas where buyers overpower sellers and push a stock's price upward after a downtrend. So, clearly in the picture, we can see resistance level, right, with a red line, and support level with a blue line. Stocks usually, what happens is that stocks tend to go up for a few days, and then it's called a consolidation area. And the consolidation area basically is digesting the gains that the stock had. And then I will put up actually Tesla. I'm pretty sure all of you want to know about Tesla. It's taken off today. But that's the second part of the show, when I share my screen with you guys. And also we'll show you what one small stock, small cap I'm trading and why I'm doing it. So resistance and support lines are something really, really important, right? Support is where a stock will literally find support by buyers, and the buyers will push it up to the resistance level, and vice versa. So, please start looking at charts. Charts are free. Look, online, a lot of information online, right? A lot of tools online that are free. You can go to stockcharts.com, or if you have trading accounts, you can look at charts and set up your charts the way it should be. The next one is going to talk about why do we need to understand support and resistance level. Well, it's super, super important to understand that. That's where supply and demand is. A lot of people make trading complicated. I said this again a million times. Keep it simple, stupid is what works. You don't need all the tools and bells and whistles and 12 screens to look at. What you need is you have to understand the fundamentals and then go deeper into it. Every 6 months, every year, you'll improve, you'll hone your trading skills, right? Why do you need support and resistance? Well, you need to understand support and resistance because they can provide entries and exits, as well as price targets for stop loss triggers. And we talked about stop loss last week. You guys can rewatch this, obviously, but all I'm asking now is that start looking at charts and start drawing your own lines and see if it makes sense. Here's another screenshot. Do you guys see on the blue line how an equity or a stock, it could be anything, it doesn't matter what stock it is or what asset classes it could be, crypto, it could be the index, it could be a futures, it could be a commodity, whatever, gold, whatever it is. But as you guys can see, the support is created by the price testing a certain price level and turning back up, testing a price level, turning back up. So that is how you define support, right? And resistance is the same thing the other way around. There's two types of support and resistance levels, okay? One is static, one is dynamic. Static is basically going to be a line that's straight. It's for simplifying things now, obviously. And then dynamic is going to be a trend line. Trend line meaning, which you guys will see on the next screenshot. So, trend lines are usually drawn at a 45-degree angle in my world. When it starts going parabolic, trouble is very near, which has happened in crypto, let's say. And I will also put up a crypto chart for you guys to see today. And then Friday, I'll start talking about crypto and what my opinion is. So basics are support and resistance levels. The only way you're going to familiarize yourself with these is by looking at as many charts as possible. Okay. And they'll be very easily identifiable. Dynamic support. A lot of people, when I look at traders and when I coach them here and there, they have lines drawn like it's Houston Rocket Center, right? They have so many lines drawn without even the proper lines to be drawn, right? I look at them, it's like mass confusion, because they have a bias, right? Bias is so important with a trader, is that we all have biases, right? I mean, you could have bought Tesla at 210 thinking it's going to go to 350, but then stock at 150 last week, right? So your bias, you have to get bias out of it. Okay, you have to basically just look at and be realistic, with what you're doing. So static support is drawn in a straight line, literally, and static resistance is drawn in a straight line. Dynamic support is drawn just like you guys see in the picture. In order for something to clarify or for you to be even able to draw a line, any line on any chart, the connection points have to be at least 2, if not 3. Otherwise, there is no trend line, there is no support, there is no resistance. A lot of people draw lines all over the place and they just make things up. And then what will happen is stock or equity or whatever or option they're trading will not move according to what they're expecting because they drew the wrong line. So key is to understand the fundamentals of support and resistance and draw the correct lines. Otherwise, you're going to get whipsawed badly. So again, I put up a couple of books last week about technical trading. John Murphy is an amazing technical trader. His book is gold. I mean, seriously, but I think we'll put up that again at the end of this segment. Like it says, the headline, support and resistance lines don't always hold. So in this red line, as we can see, there is something called resistance. Once the price went to a certain level and then it got rejected, just follow my cursor. And then it went back up again. It got rejected again, okay? But a third time is the charm, it looks like. And I will go deeper into this in the next few weeks. Not every breakout is a real breakout, right? Because in our world, there is this thing saying volume precedes price. Volume means there's a lot of attention being paid by major players. Your 100 shares, 300 shares is not the one that's going to break the stock out of a range. So as you guys can see, there is a range established, and then in a circle, there is a breakout level. Now, that breakout level was resistance. Once it goes through that, on decent breakouts, your chances, especially if you're trading with a trend, your chances of making money is going to be much higher than any other situation. So that's why this is called a setup. You have to wait for your setup. You have to be patient. You can't just, and I talked about on a really good video, you guys should watch it, called the 3 Ps: patience, position, and planning. You have to have patience. You don't have to trade every day. You don't have to be a stock jockey every day. So this is called a breakout. So those are the 4 words we're working on today, right? Support, resistance, breakout, and breakdown. And then I'll go deeper into it over the next few weeks in more detail. Here is another homework for you guys. Look at charts, draw your lines. Do you guys see all the static support and resistance level that's established? Follow my cursor again. Price comes down, tests it a couple of times, goes above it, breaks through obviously right here, and then comes back and retests it again. So this is a ladder up, right? Step up, 2 step up, 1 step back, completely normal. But then once these support and resistance levels are established, you are going to be able to not only identify them, but then ease your trading, right? Because at some point you will be on autopilot, right? This is support, this is resistance. You look at volume. If the volume is there on a breakout, you go with it. That's what you do. And then you protect yourself. Obviously, risk management comes into play. But so today's work is support, resistance, and breakout, breakdown. Breakdown is the opposite of breakout, obviously. And support is where a stock should hold. Especially after an advance, stocks will consolidate, exactly like what crypto or Bitcoin is doing these days. It had a massive move up. Now it's been going sideways for the past 2 months. It's consolidating, meaning all the people who had bought Bitcoin in the 10s, 20s, 30,000s after doubling their money, right? It's a band of support and resistance that's being created. That's because all the people who have profits are taking it, and all the new longs or all the new buyers are stepping up. So there is equilibrium created. That's why it's called the consolidation area. And I'll go through these 4 real quickly. Support and resistance level, frequently asked questions. Why is the identification of support and resistance important in technical analysis? It is because that's where stocks are going to halt their downtrend, right? And turn up and giving you a good entry point if you're interested in that equity. And again, if you are going with the trend is your friend. Never forget that. So again, I'm going to simplify this. I know you guys may not like this, but I get asked this question all the time. People go like, "Oh, Serge, what is this? What do you do? What is, give me a tip." I go, "Listen, buddy, tips are at the horse races. We don't deal with tips. But what I'm going to do is that educate yourself and inform yourself and start learning, because look, it takes years and sometimes months. What you put into it is what you're going to get out of it. In this day and age with internet and TikTok and all this glorification and gamification of these apps, trading apps especially, they want you to trade. I mean, they're going commission-free trade. Well, it's not commission-free. You're creating liquidity for them. You're creating order flow for their wholesalers. They're making a half a penny or a penny on every share that you're buying and selling. That's how they make their money. There's no free meals on this planet. So I'm more like, okay, educate yourself, at least with the basics, because basics are going to be mostly enough, right? There's no reason to complicate things. But supply and demand is truly why stocks go up and down, just like tomatoes and potatoes. I mean, seriously, I watched so many YouTube videos this week that they all make it complicated. Oh, I have this indicator, I have that indicator, I have this one, I have that one. No, just create what's good for you, what works for you, and as simply as possible, supply and demand. Look, supply and demand rules economics, right? I mean, we all figured a few months ago or 6 months ago, remember what happened to egg prices, right? A dozen eggs used to be like $2. Then it went to $6. What? Because there was not enough supply and there was a lot of demand. Well, once that got, taken care of, eggs are back down to, $2 a dozen again. Why? Because enough supply was created, and then prices will have to adjust on every equity, on every asset class by supply and demand. There is no ifs and buts about it. So technical analysis basically finds the supply and demand areas, okay? And so with that said, let's go to I'll answer the questions seriously, Will. I saw today, these are the 2 books I put up last week, okay? You can go buy them at Amazon. They're not expensive. The one, if you're a complete beginner, you have absolutely no idea what I'm talking about, a good starting point is the book on the right, Beginner's Guide to Technical Analysis. If you're a little bit more intermediate and advanced, but there is also enough stuff on beginners. So John Murphy's book on the left, Technical Analysis of the Financial Markets, will cover you from beginning to end, okay? From more complicated setups to anything else. If you want to buy one single book in your life about technical analysis, it should be the one on the left. Because if you buy the one on the right, it may not go into a lot of detail, but then the one on the left is the Bible. So I highly recommend it. It's not expensive. Look at it as, your expense towards your education, right? So another thing that I want to talk to you guys about today is okay, options, right? So a lot of people trade options, and a lot of jockeys out there who keep just swinging options. In the days of meme stocks, you guys remember those? GameStop, AMC, Bed Bath & Beyond, and many more. And what happened? They bankrupted a ton of hedge funds. Why? Because of this right here, options. So what are options? I do trade options a lot, okay? But again, I'm going to go simple basics today. Oh, I see my partner here.
What's up?
How are you, sir? How's your work?
Fantastic. What's up?
Okay, I will answer those questions. I just hold your horses for a second. So options is a derivative. Derivative meaning is derived from the underlying equity or index or commodity, because there is options all over the place these days. Yeah, I will talk Tesla going trend lines today, Jared. Understanding stock options. Again, I will recommend 3 books at the end of this segment. Start educating. But options are a type of financial instrument known as a derivative. As I said, this means their worth is based on or derived from the value of the underlying security or the asset. In the case of stock options, which a lot of people trade these days, stock options has exploded with 2020. During the pandemic, everybody was getting government money. Everybody was in the stock market. Options were being swung by the millions every day. Contracts, by the way. The option is a contract that creates an agreement between two parties, a buyer and a seller. In every transaction, by the way, stock, equity, futures, commodities, there's always two sides of the party, right? A buyer and a seller. It has to be. And just like a real estate transaction, a buyer and a seller, or a car dealership, right? There's a buyer and a seller. There are two types of options. One is a call option. The other one is called a put option. I'm not going to get into, just like with technical analysis, I talked to you guys about, support, resistance, breakout, breakdown. I'm going to keep it simple today. There is million ways to trade options, risky ways, less risky ways, whatever they are. You guys will figure that out. Two types of options. There's one is called a call option. One is called a put option. Now, those are given. Those don't change. There is some other keywords that you have to understand when it comes to options. One is going to be called a strike price, like a baseball strike price. Another one is going to be expiration date, right? So those four, you have to get it in your head. Just call, put, strike, and expiration, okay? Call options are options that give the right to the buyer of the call option to purchase the underlying asset at a certain time at a certain price. So certain time is called expiration. Certain price is the strike price of that option. Now, if I can, put an, analogy in front of you guys, let's say I know that there's going to be a freeway built next to a piece of land. Okay, call it inside information. We don't trade on inside information, but call it inside information. So that piece of land that exists, I want to buy, obviously, because what's going to happen to the price of the piece of land? Okay, it's going to go up once the news comes out, right? That the freeway is going to be built or a mall is going to be built. And then once the freeway is built, then houses are going to be built, right? That land is going to be very valuable. Well, with an option, I don't want to spend and go buy the whole asset all at once. I want to give myself some time in case government maybe changes their mind and they don't build a freeway there, right? So I want to limit my risk. So options are a good way of trading things with limited risk and unlimited upside or downside potential, okay? So let's say in that piece of land analogy, I go to the owner of the land. I go, look, I want to buy an option. I'm going to give you upfront money. I'm going to give you $1,000 today, but you have the obligation to sell me that piece of land in 6 months at a certain price, because this call option that I'm buying on this piece of land is our contract. You must adhere to that contract. Okay. So let's say 3 months goes by, it's announced that a freeway is going to be built. Well, what happens? I have the option to buy from the owner that piece of land at a certain time at a certain price. Now, I can wait until that day and buy it. Now, then I have to put up more money, obviously. But what did I do? I didn't tie up my equity or capital, all of it, the first day. I gave myself a chance with limited downside. If the government had said, okay, no freeways being built, well, the money that I put up, little amount of money that I put up, the $1,000 to buy that piece of land, would go bye-bye. But what did I do? Is it better to buy the whole piece of land and then you get stuck with it? Or is it better to buy an option on that piece of land and then only risk $1,000? And then if I'm wrong, I'm wrong. I lost all of it, but at least I didn't lose everything, right? So with that analogy, call options, put options, call options give you the right to buy the underlying asset at a certain price at a certain time, which is strike and expiration. And then put option gives you the right to sell that stock at a certain time, gives you the right, not the obligation, to sell an underlying asset at a certain time at a certain price. Okay, pretty simple, right? Now, there is two types of options, American and European. You guys will figure that out. It's about how you exercise those, but let's not get into those details yet. Here's expiration date. Expiration date is when that option expires. It's just the name of it, expiration date, right? Expiration is, could be a week out, it could be a month out. In today's proliferated option markets, there are weekly options, there are bi-weekly options, there are bi-monthly options. But then the rule of thumb is, if you're buying options in the old days, before the weekly showed up, options expired on the third Friday of every single month, period. But now you can do weekly because all the option jockeys are out there. They gamble. Oh, like let's say last week, Facebook earnings were horrible, right? You could have bought a 1 month out option, 2 month out put option, or a call option. If you bought call options, you lost your money. If you bought a put option, you made a fortune, right? And that's how I grew my little Robinhood account last week, with buying Facebook puts. But now there is options like this Friday. There's going to be a bunch of options that are expiring, weekly options. Well, is it gambling? It really is. Yeah. So, but I will talk more about this in the future, what options I use, what I look for. Look, options actually is more complicated than technical analysis. It takes years and years to figure out. But again, I'm going to keep it simple. Again, you guys have to do homework on your own. And then expiration date, I explained. Strike price is the price of the underlying asset that the contract is being made. Okay. So let's take an example of Tesla. So Tesla, before the earnings came out, okay, if I bought a call option on Tesla, call options on equities specifically are sometimes every $2.50, sometimes every $5, sometimes every $10. So I will show you guys, I will share you guys my screen with the Tesla option chain, and you guys will understand what I'm talking about. But that's the contract price that we're setting. Remember the land? I told the owner I want to buy this land in 2 months or 6 months from you at this price. That is called the strike price. Now, the reason options are volatile or can make you fortunes or lose you fortunes is one single option, equals 100 shares of the underlying equity. Now, if I were to buy 100 shares of Tesla at $150, that would cost you $15,000. But I could have bought one single option that represents 100 shares of Tesla, let's say going out to June 21st, which is the third Friday of June. I probably would have paid $18 for it. Times 100, I would have paid $1,800 for that option, for that expiration date, and for that strike price. Now, which one is more? $15,000, buy the stock straight up, or buy the option? Now, with the stock, the holding period is forever. You can hold Tesla for the next 25 years because you own the equity. With an option, not only you have to be right in the direction, but also on the duration. Because if I bought a June option, it's going to expire on the third Friday. If the stock is not above 150, which was our strike price, then I'm going to lose all my money. Meaning, which is the next one, it's called a premium. That's what I paid to that landowner to lock up that land, right? And that's what it's called a premium. So these 6 words, okay? 1, call option. 2, put option. 3, expiration date. 4, strike price. 5, contract size. Contract size is always the same. One option equals 100 shares of the underlying equity. And the premium. Premium is what you're paying to play. And so that's about options. I will definitely go deeper into this. There is something called the Greeks in options, but we're not going to go into that today. Those are delta, gamma, theta, rho. There's all these things that you guys will learn. But long story short, here is the books that I'm going to recommend you guys that you go buy. 3 books. Okay. The first one, Options Trading Simplified for Beginners. Option trade. I mean, again, these are books I have read, so I'm recommending it. I'm not affiliated with Amazon. I'm not affiliated with any of these people. But because I've read the books, okay, it makes sense to recommend those books because you guys need to do some homework or legwork. I'm just not going to feed you everything, right? That's one book. Again, it's on Amazon. You guys can go buy it. The second one, this is a little bit more advanced, but I know in the audience, I'm sure there's going to be some advanced folks, some intermediate folks, and some complete beginners. So for beginners, I would recommend this one right here. Or for intermediate to advanced, I would highly recommend this book because it goes into massive, different strategies. And this is like a hybrid between the two. Okay. It tells you, it not only explains options, but it also gives you tactics, strategies, all these things. And, so take your pick. I mean, if your budget is $10, $20, whatever, pick the one that's 10, $20. So with that said, there you go. See, Matt is talking about his Tesla options. We'll talk about Tesla. So now I'm going to share my screen with you guys. So here's my screen. There is one little tiny stock that my high frequency was trading today. It's still trading. We're doing really, really well on that one. The symbol is MULN. It's on the upper left-hand corner. Now that's NASDAQ level 2. It literally is trading by itself right now. And I'll give you guys an idea of that. So I know I disappeared, right? So here's MULN. I'm going to put up the chart. How do I find these stocks? Okay, I have scanners that I look at every morning, and it tells me the story. So this is MULN today. As you guys can see on the upper right-hand corner, I'm circling my scroller. This stock has only 7 million shares outstanding and has already traded close to 35 million shares. So what does that mean? That means the algorithms are absolutely high-frequency trading systems are trading in and out, making their money. As you guys can see on the bottom, I'm moving my cursor. The volume has exploded. That's what we're looking at. Remember the support and resistance lines that we talked about like a couple of minutes ago? Okay, do you guys see this? What happens here? I'm going to put a line that is the classic resistance line, right? Right here. Do you guys see that red line up there I just put up? Right? So what happened? Just like the picture, the stock in the morning opened up strong, went up to 420, 430 levels, pulled back all the way to 365, went back up there again, right? And then pulled back again. So now that's resistance. But look what happened to the stock when it broke the resistance line with very high volume. As I'm circling the volume on the bottom, stock went from 435 to 517. That's 80 cents, right? Now, you don't have to catch the low, sell the high. 80 cents on a $4.34 is over 20%, right? And this is happening in minutes. Each single bar, by the way, is a minute. And this is what's happened today, right? So that's the 2-day. You guys see what I'm talking about resistance, right? When resistance breaks in the proper fashion, this is what happens. I'm going to show you guys the daily chart of that. On the daily chart, it looks like a dead man's EKG, right? But look at the volume. 50 million shares on a stock with only 7 million shares float, right? And then I'm going to talk a little bit about general market situation. This is the triple Qs. Triple Qs are NASDAQ 100. Obviously, it turned down. Watch my cursor again. And then now it's kind of snapping back up. My opinion, market at best is going to go sideways for a little bit. If not, retest the low because this is, okay, remember support, right? We talked about support. We talked about resistance. Do you guys see all these lines that I've drawn? These are the proper way to draw lines, people. The price came up, pulled back, came up, pulled back, and then when it broke out, look what happens correctly, right? So you have to understand the support and resistance lines. Very, very important. Here's another line that I had drawn. Remember the dynamic and the static resistance lines, right? Here's a perfect example of on the triple Qs what a dynamic resistance line looks like. Okay, so this was a top, it pulled back, came up. Now the trend line got established because it pulled back again, made a lower low. It went up, It came back down again. This is no magic. This is no hocus pocus, people. This is a dynamic trend line that was created. Now, what happened when the stock broke out, or when the triple Qs broke out? That was a 372 to 447. That's 70 handles, 70 points. 70 points on 372 is over 15, 18, 20%. Now, if you were trading options on the triple Qs, when it broke out, not when it was doing this zigzag stuff, right? Obviously, you would have made a decent money. And here's the triple Qs looking back 2 years, right? And do you see how many lines I have? I don't have that many lines, do I? So here's a line that I drew, and then that's what I'm expecting the market to go to, actually, after all this move is over. And it kind of coincides with the 200-day moving average, okay, which we talked about last week, moving averages. Yeah, I mean, market's still on an uptrend, nothing to panic about. It had a little correction, 7% or so, and very normal in uptrends. And yeah, I think these support resistance lines need to be drawn and need to be understood before you can even take a shot of anything. And here's the wonderful Tesla. I have a little bit more lines because I look at bigger pictures. I have to go back 5 years. So if I go back 5 years on Tesla, this is not magic. Tesla, all the way back to the lower left-hand corner, you guys can see there is a low established here. There is another low established here. That's a proper trend line. Without 2 points or minimum of 3 points, there is no trend line. Again, look at this trend line, the red line. There is the price of Tesla, retest, 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 retest. Every single time it got rejected. That's a clear indication of a trend line. I cannot put this any more simply, right? So now what is happening? On this lower trend line, that goes back literally to when Tesla was 20 bucks a share. And you guys have to look at longer term pictures as well. Don't be a stock jockey and look at like every goddamn minute of what's going on. This date is 2020. Okay. Now, is it a coincidence that Tesla literally touched that line at 140, 139, 140 last week before the earnings? And look what Tesla is doing today. It rallied from 140 to 195. It's up big again today. But now on the short term, this is the short-term picture, right? So I drew a resistance line right here because it coincides with the stuff that I see in the back, like about 2 years ago. Here's a clear resistance line. So the stock is up 20 bucks today or whatever it is. This line right here is going to be the first line of resistance. And this line right here up there is the dynamic one that it connects all those tops, is going to be the next line of resistance. Until otherwise proven, Tesla now at best is in a neutral position, right? But remember, we talked about options. If you bought options at 140, 150, 160, you'd be making a fortune. Like Matt says, his options are doing really, really well. So stock at right about 207 is going to come into resistance, which coincides with the 200-day moving average curling over. At that point, if I had Tesla, I would highly recommend selling it. I will probably short Tesla at that point. Short meaning betting, and then we'll talk about that next week. Shorting meaning selling something without owning it. And yeah, I mean, that's it. That's as clear as I can put it. So that's Tesla. Let's get back to seeing you guys in a second. And here we are. So all right, so let's answer some questions. Thank you, Queen
Before,
Brown.
did you get into your hold on, what was it that you put your badge of honor?
Oh, I didn't. I forgot. Thank you, buddy. Thank you. Okay, so you guys know on the upper right-hand corner right here, I have CNBC on mute. Who's the biggest clown on CNBC? Anybody know? Anybody know? Wait, anybody know the biggest clown on CNBC? You guys watch him every day, 3 o'clock, especially. Anybody know?
I think the running joke is you always go against what he says.
Yes.
And you'll win.
Yes.
Whatever
100%.
he says, go against.
100%, bro. 100%. Oh, there's Jared. There's Jared. Jared got it.
Win.
Jared wins. Jared, winner. Jimbo. Yes.
Yep. Everybody's getting it now.
Everybody's getting it now, right?
Nick,
Okay.
Greek. Everybody.
Okay, so okay, here it is. Here it is, people. Here it is. Are you guys ready? Uh, there's
Ba-da-dum-bum.
Jimbo. There's Jimbo, CNBC Investing Club. Jim Cramer
On X.
on X blocked me because
No,
I said probably some stuff that he didn't like, right? I mean, it's a badge of honor. This is my honor right here. So if he's blocking me, that means he's paying attention.
yeah.
Seriously, he
And you
has
know what?
blocked me.
Honestly, I'm gonna test this out. When I'm gonna verify myself on X, and
Yeah,
then I am going to make some sort of statement that says anytime at Jim Cramer says to buy or sell something, do the opposite, and
yeah.
you'll win.
Oh, he will
And
block you.
I guarantee you, within like 3 hours, I'll be blocked.
It's not 3 hours. No, because I gave him a lot of flack, because he
Uh-huh.
just, I mean, bro, it just doesn't end, right? I mean, look, I'm not saying he's bad or anything. I just don't, I think he's late to the party always. But again, I'm sure he has a job to do. It's a tough job to be in front of millions of people on CNBC every day at 3 p.m. Pacific. I used to watch him quite a bit, but then I just got irritated. Basically, my story with Jim Cramer is like my story with Harry, right? So I was to heckle everybody there, and then ultimately we ended up working together. So maybe one of these days Jim will invite me to his show on CNBC, so I can teach him how to do this properly. Man, thank you, Mary. It's a badge. It's
Well,
my
you know
it's my
what?
badge of honor.
You know what? He's making a lot of people a lot of money, but the problem
Yes,
is it's
yes,
the small portion who want to get out of their positions, who are ready to sell off that particular asset that they have, and then
yeah,
it leaves it to the little guy, and the little guy gets stuck paying the bill.
yeah. I
So
agree, million percent.
he's definitely making those people money. He's just not doing it in the way that the
He,
little
he,
guy
he-
is going to appreciate.
absolutely, he is. Okay, my point in all of this is, look, he's a very smart man. I think he's got an Ivy League education, and I'm not going to question his integrity. I think his wish is good, but I don't think I don't think his timing is that good. But he's more for the buy and hold forever kind of a crowd, right? And he's been right more than he's been wrong, but then his timing has been pretty horrible, to be honest with you. And yeah, so that's Jimbo. Um, okay, so let's answer some
Here you go.
questions.
Posted by Kramer 3 hours ago, right here.
Which one?
Bernstein upgrade of Apple could be the kiss of death jinx. Watch them downgrade Apple when Apple misses.
Yeah, Apple. We can look at Apple real quick. Let's take a look at it. Apple today has a nice big move. That's why it's holding the NASDAQ triple Qs together. Let's take a quick look at Apple. There's Tesla. There's Apple. Okay, let's look at Apple. All right. So I have, okay, this is perfect. There you go. Okay. Do you guys see my resistance lines that I have drawn? Right. There is one major one up there at 199. And here's one at 178. Stock is in no man's land, honestly, right? I mean, nowhere. And and I'm like, nah, it's just kind of gapped up today, and just it's coming into resistance at 178. The moving average is 200-day average is of 177 ish. So I'll be a seller of Apple, right? About another 3-4 points, just like I'll be a seller of Tesla. I'm sorry to to rain on your parade, guys, if you're long Tesla and love Tesla, but I'm realistic. Tesla, I'll definitely be a seller at 205, 200 to 205. If not, I'll probably go short Tesla. But otherwise, yeah, I mean, look, there's a lot of clowns on there's a lot of clowns on CNBC. Okay. What is their job on CNBC? To sell you some shit. To sell you, because look, they could be saying, yeah, I love the stock, while they'll be selling it to you. You know what I'm saying? That's how they do it at large size. You can't do it any other way. So my thing is, that's why they're called sell side analysts. They're all sell side analysts, meaning they depend on retail flow. They depend on new money coming in to support their commission business or their money management business, wealth management business. This is huge business, right? You guys got to understand that. And they take a cut like 1%, 2% of assets. That's a lot of money. We're talking trillions and trillions of dollars, right? All right. So I
You ready
just
to
did.
get questions
I
then?
just did. Ein. I just showed you the dynamic, the support lines, but I will go into it. Again, investor club. Yeah, that's a good. See, that I want to do that, but then I don't know how to manage it. I know how to manage it. If I do it, like create my own little investment club. Everybody puts $500 in there or whatever, and then I'll trade it, right? But I have to look at the legalities of it. So let's answer some questions. Okay, Tesla calls.
Right.
I'll go all the way
Hold on.
back.
I'll put the questions on the screen for you.
Yeah, William, definitely. Let's go back and look at the triple Qs, what I'm expecting. I actually am expecting the triple Qs called the retest. Here's the triple Qs. Definitely going to be a topsy-turvy. Okay, I'm going to give you clean reasons for it, right? I'm not going to BS you guys. My expectation is, triple Qs, came down to exactly where they should came down to. You guys see that green line, that support now? Now, one thing that we didn't talk about when I was talking about technical trading, support and resistance, whatever was resistance before, see that green line that I highlighted for you guys? That was resistance. Once resistance breaks and it goes above it, the price, like I'm moving my cursor up and down, that automatically on the way back down is going to be support now. That's why you draw a line there. So old resistance becomes support on the leg down, which, no joke, the price came exactly down to where it should have gone down to, and then it turned back up. Now, let's answer Ein's question. Let's draw a resistance line. That's a proper one right here. This is resistance. That's your static resistance, right? There is one time it went up, pull back, went up, pull back, it went up, got rejected. That's a clear indication of a resistance line at 450, right? Now support is established because we're rallying at 413 and 450. That's about 35 handles on the triple Qs. That's a lot. So now what is happening is we're rallying back. Usually after a breakdown or a rollover, we will rally back on low volume, which on the lower side, lower right-hand corner. Now I'm circling my cursor. You guys will see. And then there will be a retest of this support line right here. Okay. If that breaks, what is the next support line? This goes back too far. I will eliminate this. Here is your next support line, right? Right down to 395 on the triple Qs. Why? Because this was a resistance line. It broke out, it pulled back to it, and then that's a continuation pattern. This will be the next support line. And that's how we play this game. And then on the longer term picture, you guys see this uptrend? Okay. If you look at triple Qs going back to pandemic, actually, which is 2020, what this waterfall effect that we had, crash. And then there's one low, there's one other low, there's one other low. That's why this is a dynamic trend line, uptrend line. And technical analysis is all about making sure to figure out where your entries and exits are going to be. Okay. Here's another uptrend line. It's a correct uptrend line about 45 degrees, and it connects 2 points of minimum. Well, there you go. By the way, you do not connect this until the price makes a new high, which it did. And here was your best dynamic explanation of dynamic resistance line. And right there, when it broke out, it kept going and going and going, and that's your trend. And that's when you make your money. You don't have to be, let's see, right here, you're losing money in the chop. Right here on the breakout, trade once, but trade it well. That's my recommendation. So I will keep talking about this until I'm blue in the face. Please understand technicals. Please, please, please. Otherwise, you're going to get chopped. You're going to get killed. Other questions? Are some of the zones lines resistance equal to? Absolutely. Supply and demand, just like we said, right? Tomatoes and potatoes. Don't make it complicated, stupid. Stocks go up and down on supply and demand. More buyers. Look, sometimes people ask me, why did the stock go up? I go, more buyers than sellers. And they look at me like, stupid. Of course it is. I'm like, no, I really mean it. Something will go up because there is more demand. There's more buyers than sellers. It's as simple as that. You just have to learn how to read the tea leaves. Okay. And I mean, I can't put it more simply. Chris, I watched so many YouTube videos this week, and then now Google is feeding me these all the time now. my my YouTube feed is full of these videos. I go like, how do these people survive? But then I look at them; they have like 500,000 subscribers, and I'm going like, we should have 500,000 subscribers because
Well,
these people,
you're brand new, so
these people are just okay. Yeah, please, people, get me some subscribers. Recommend it to your friends. I call it the way I see it. All I know is these people. I think they're just making money on YouTube. I don't think they're trading or making any money on anything else.
well,
Because
you
I
know
don't
what?
see any.
Here's one of the things that I've looked at when it comes to some of these so-called YouTubers in the finance arena is they'll talk about their picks, and then because they have such a large audience capture, that they'll
Yes.
talk about these couple of tips and say, "Oh, this is what I'm buying." Probably already have bought it, and then you have 1.5 million subs or 150,000 people that are watching it. They're like, "Oh, I'm going to buy it too." So it's going to raise the price a little bit.
Oh, those,
And
yeah, boiler room type of shit. You know what I mean?
yep,
Like, they pump and dump stuff. And I'm going like,
yep,
buddy, that doesn't work. You're gonna go to the poorhouse. And you know what happened? This is the problem. Pandemic was horrible for me. I mean, not personally, it was fine. but
mhm,
pandemic created, oh, you know what it created? It created a lot of gamblers, right? The
yep,
high adrenaline, no follow the 3 Ps, forget about any of that. I buy an option today, it'll triple tomorrow. GameStop, I made 100,000 in 10 minutes. I'm like, where are you today?
yep.
Right?
Yeah,
Where are
but
you today?
not
I'm
only
still
that,
here. Where are you?
not only that,
You've
that was
blown your
also
account
when
already.
That's when Robinhood really started taking off too. So
Yeah,
you had all these people who had no idea what they were doing,
none.
starting to sell options or
Yeah,
trade options with no background.
zero.
And because they're following saying, "Oh, I made $1 million trading Tesla," and then when Tesla drops and they put puts on, they're owing a shit ton of money because of everything that's
Yeah,
associated with it, and it's just
you
because
know,
they
on
have no idea what
GameStop,
they're doing.
I swear to God, on GameStop, I made so much money selling options to these people. We were going to get into that, people, because there is something called implied volatility in options. So the market makers are not stupid, right? So, like I said, there is somebody's buying those options, somebody's selling those options. When there's no actual seller, that's why there are market makers. They step in and create liquidity and sell options. Well, when they're selling options, do you think they're going to sell it to you at wholesale? Absolutely not. So what they do is they pump up the implied volatility to some ridiculous levels that even if you are right in the direction of a stock, you're not going to make money because the volatility is so high, the implied volatility, that all it's going to do is it's going to eat into your premium slowly. And then, God forbid, that stock goes against you, that option will disappear off the face of the planet. And people were just buying these weekly options, Chris. They were
Mhm.
paying like ridiculous premium for these options. I'm going like, I got to sell this thing. I got to sell the other side. It is risky. I will explain it to you guys.
Yep. Here we got a
You
question.
had,
Do you have a rule of thumb
yes,
against false breakouts?
absolutely. First of all, don't draw trend lines unless it's touching at least 2 points, if not three, right? And watch volume. Most fake breakouts will happen on low volume, right? And they will hit the stops on the shorts. And you have to watch volume. For me, volume is the Bible. Volume precedes price. Period. There's no ifs, there's no buts. Whoever questions it, come on the show and then we can discuss it. Thank you, Ein. Yes, Friday we'll be back. So any other questions, guys? Let's see. Tiger Meg, is there stop loss to take profits you can adjust in the way up? Absolutely. There is more than stop losses. There is a lot of charts and a lot of companies offer you a lot of tools these days, right? There's the dot system that you can follow up, basically trailing stops, right? If you bought something and it's going your direction, right? Let's say you're up 10%. Okay, you'll set a trailing stop at 3. The next day it will go to 4%. The next day it'll go to 5%. So basically, it's guaranteeing you a profit. You can do trailing stops all the way up. And there's automated systems. Tiger Meg, I think you're Megan. I know you are. So you can use that, right? easy way to do it. And if it turns back down, but stops, look, there's a lot of hearsay out there. I'll finish with this, that professionals are like market makers will go for stops, wash them out, and then spike it back up. Yes and no. I don't think market makers give a shit about the retail investor whatsoever. In the old days, we definitely did that. Well, behind me, you guys see this behind me right there? Okay. That's the outcry, open outcry. Like, this means I'm selling, that means I'm buying, and we're just screaming for hours. Guess what? We had this paper in our hands. I knew every stop level. It was in my hand that was coming order flow from my institutions to me. I knew where their stops were, right? So I'm going like, if the price gets close to this, all these are going to get hit. I will have to scream sell out of my head for the next 15 minutes to clean this up. Well, I'd rather take the other side because I knew it would bounce and then I make my little increment. In this day and age, not so much. Sergio, what do you think about Cloudflare? Let's take a look. We'll finish on that. What is the symbol on that? Is it? I don't even know. Cloudflare. What is the symbol on that, buddy? What is it? Cloudflare.
Looks like NET.
What is it? Oh, NET. He put that there. Okay,
Yeah.
NET.
Yep, it's
All
right
right.
there.
Yeah. I mean, look, this perfect example of, okay, let's draw some lines. Let's have some fun. So you guys see the volume spike here? I'm sure it's earnings, like it says E up top. They blew out their earnings, but let's draw some lines before we do anything else. Let's look at Cloudflare going back 2 years. All right. So I didn't pay attention. Class is in session. I have not seen this stock. I don't know anything about the stock, but I'm just going to draw some lines for you guys. So support line, okay? You guys see here, 1, 2, 3, 4. You guys see this? That's the support line right there, number 1. Let's draw one line right there, okay? Support lines on my charts are always going to be green. Resistance lines are always going to be red. Now, let's draw a dynamic one. And now that's called a trend line. Here's a low right here, my cursor, you guys see it. There's another low, right? So now I can connect these two because the price made a higher high. Okay, so that's your uptrend line. On the short term, obviously stock gapped up on amazing earnings. Stock is in a kind of a quasi uptrend, right? Not my favorite looking chart, to be honest with you. Let me go back 3 years. Yeah, during the pandemic, it went to like 220. I mean, yeah, there are much better looking charts than this, right? Chart wise, I don't know anything about Cloudflare, okay? And yeah, I mean, it broke down. It's under the 50-day
they
moving
are
average.
a hosting service, and they
The
do
what?
some security. I believe it's hosting services and security, online security, and all that type of stuff.
Yeah, I mean, stock is breaking down. Look, earnings came out, they blew it out. It went up to 115. What's its business down here at 85? It shouldn't be down there. So to me, it's like, everybody got caught up here. Not my thing. I mean, if I had bought that on that day, I would have blown myself out right about here, lost about 10% probably. Not my style of stock, not a strong conviction in it, not a massive uptrend. It's okay, nothing major. You have a rule of thumb against false breakouts. Yeah, that was that. Volume, buddy. You got to watch volume. What else? Great show. Thank you. Okay, so we're at 10:58. 1 more minute, and then you guys, please subscribe, thumbs up, notifications on. I don't know. Did the notifications go out today, buddy?
I'm not sure.
I'm not sure. Did you guys get notified for that there is power hour coming up? I don't know. Yeah, but I don't think YouTube is sending you guys notifications. I don't know what's going on with YouTube. Do either of you ever play? Okay, play is the wrong word. No, we don't play. We're serious. I'm joking, Megan. Do either of you either play with PineScript in TradingView as far as building indicators? No. How many indicators? No. See? Yes, no. I got notified. Okay, some people did, some people didn't. Okay. Tiger, Megan, I know who you are. I will start talking about indicators hopefully next couple of weeks. Okay. I watch like 3. That's outside the chart. In the chart, moving averages, Bollinger Bands, below RSI, no MACD. VWAP, obviously, if you're day trading, or meaning volume weighted average price. And I watch money flow. That's it. Keep it simple, stupid, Megan. You don't need any of these 50 different. I have it. I don't use it. I will never use it. But you guys will learn. Thank you. If not, notifications will go. I don't know. So we're doing our best. So anyway, thank you for joining me. Friday, same time, same place. We'll start getting deeper into options. We'll start getting deeper into technical. We keep building. But please buy those books. Just buy one, at least buy one. So by the end of a couple of months, I want to talk the same language, because you know why my problem is in this. I think all of you know what I know already, and I'm talking so fast. And then I'm going like, wait a minute. And I watch the replay. I go like, what did I do that? So I want you guys to, move yourselves up, not to my level, but to a level that we can comfortably talk about stuff. So that's it. Have a great week. Have a great week. Make some money. I haven't traded my small account yet today. So I'm like, but again, 3 P's. We put the video up yesterday. Patience, position, planning. You don't have to trade every day. Don't be a stock jockey. Position size, risk management, planning. Have a damn plan. Without that, you ain't going anywhere. So thank you all. We'll see you Friday.